What's up guys, it's Nathan here. Today we dive into the Australian economy's recent developments and potential impacts to the Reserve Bank of Australia's upcoming decision on what they do with the cash rate. Inflation has shown signs of cooling down as it dropped in February, sparking debates on whether the Reserve Bank will pause on its aggressive rate hikes. We'll explore the key economic indicators, the Reserve Bank's stance, and potential implications of their upcoming decision. So let's dive into the details and look into Australia's current economic landscape and the crucial factors that could influence the country's financial future. New figures have shown that inflation has dropped to 6.8% in February, down from 7.4% for the previous month, which has fueled speculation that the Reserve Bank might pause its aggressive rate hike tightening next month. The most recent consumer price index supports the idea that inflation may have reached its peak in late last year. However, it's essential to note that the cost of living pressures continue to be a significant concern. Economists had previously forecast for CPI would potentially ease down to 7.2, but the latest figures have exceeded those expectations. Marcel Thlylian, the head of Asia Pacific at Capital Economics, believes that the drop in inflation combined with weaker consumption might lead the Reserve Bank of Australia to pause its tightening cycle next month. However, he still expects that there will be one final rate hike in May's board meeting. And if you find value in this video, please consider hitting that subscribe button as it really helps out the channel. And a big thank you to all our subscribers for your support. Inspires us to create more content we hope you enjoy. One of the most significant contributions to inflation in the year leading to February was 9.9% increase in housing costs, as revealed by the Australian Bureau of Statistics. While asking rents are rising at double-digit rates, rent inflation in the CPI figures remains steady at 4.8%. Electricity prices, which have slightly increased to 17.2%, up from 16.8%, and building costs have decreased down to 13%, down from the previous 14.7% for the year to January. Food prices remained relatively stable, with an increase of 8% in the year leading to February compared to an 8.2% previously. On the other hand, recreation and cultural inflation experienced a sharp drop, 6.4% from 10.2%. And this can be attributed to the end of the holiday season, which saw travel and accommodation prices decline from 17.8% to 14.9%. Fuel prices have seen an increase of 5.6% in the year to February, which was down from previous 7.5% increase. As the Reserve Bank prepares to convene for its Tuesday meeting, they will decide whether or not they'll implement the 11th consecutive rate rise, which would bring the official cash rate to 3.8%. It's important to note that monthly annual inflation reached its highest at 8.4% in December of last year, before slowing down to 7.4% last month in January, and now at 6.8% in the most recent figures. During March's meeting, the Reserve Bank revealed that the board had considered maintaining the current rates, but ultimately decided to hike the cash rate instead. Reserve Bank Governor Philip Lowe has emphasized that the data, including today's inflation report, will guide his decision. It's worth mentioning that the relatively new monthly CPI data doesn't encompass a full basket of consumer goods each month. Instead, the quarterly report offers a more comprehensive picture of inflation. And despite its limitation, the Reserve Bank of Australia has made it clear that the more frequent inflation numbers do serve as a valuable and up-to-date guide on how price pressures are faring. With what looks like inflation peaking in December at 7.8%, the March quarterly report is eagerly anticipated and scheduled to be released on the 26th of April. This report will provide additional insights into Australia's state of inflation and help the Reserve Bank make informed decisions on how they can move forward. With the inflation rate falling lower than expected in February, economists and the markets are divided over the possibility of an 11th straight rate hike. The monthly CPI indicator serves as one of the 4 key data points Reserve Bank Governor Philip Lowe is taking into consideration for making the crucial decision on whether the central bank will halt further rate increases or look to increase instead. The upcoming board meeting next Tuesday will be pivotal in regards to this. Although the market anticipates the Reserve Bank is going to maintain the cash rate at 3.6%, the majority of economists are expecting the central bank to implement another 25 basis point increase in April. This is due to indications that the Australian economy is still overheating. And remember to like, share, and subscribe to stay up to date with all things property and finance. So let's examine the 4 data points highlighted by Dr. Lowe at the Australian Financial Review Business Summit on the 7th of March and how they present mixed results in the context of the economic situation. Earlier in the month, data revealed that the unemployment rate dropped to a nearly 50-year low at 3.5% in February. Meanwhile, surveyed business conditions stayed at close to historical highs. These indicators suggest that the Australian economy remains robust in certain areas. On the other hand, retail sales saw modest increase of 0.2% in February, as reported by ABS. Notably, spending levels had remained unchanged from 5 months ago, indicating that households may be cutting back on non-essential expenditures. The RBA is anticipating the economy is decelerating further as interest rate hikes begin to impact on household budgets. Current annual GDP growth stands at 2.7%, but the central bank's latest forecast released in February projects a decline to 1.6% by the end of the year. In light of these mixed data points, the Reserve Bank will need to carefully consider its approach to interest rates in order to maintain a balance between supporting economic growth and addressing inflation pressures. The recent drop in inflation, along with other mixed economic indicators, has created uncertainty surrounding the Reserve Bank of Australia's upcoming decision. And this is where ultimately the Reserve Bank is looking to strike the balance between supporting the economic growth and addressing these inflationary pressures they've talked about for a long time. While many experts believe the Reserve Bank may pause its aggressive rate hikes, others argue that the central bank will continue to tighten the monetary policy due to overheating in the economy. Ultimately, the Reserve Bank's decision on Tuesday will play a crucial role in shaping Australia's financial future amid ongoing inflation and economic challenges. Here at Hunter Galloway, we're mortgage brokers that get loans approved. So if you're looking to buy your first home, get an investment upgrade, or even refinance, we can help. There's no cost for the service, and you can reach out with us at huntergalloway.com.au, where you can fill in a contact form, and we'd love to get in touch, or call us directly on 1300 088 065. And guys, as always, thanks for watching.